everyone. Welcome to the Stock Market Morning Prep video for Tuesday, December 9th. Market's finally in the red. Dow Jones down 106. Nasdaq down 40. S&P down 15. And the Russell down about $15.22. And this all came really unexpected, and it usually does, right around 12-ish. I'll show you a chart in a moment. But we had one big down candle, and we went sideways, and then we had one quick dip lower, and that was really the low of the day. So not much price movement, but nonetheless, the numbers were red across the board, and we pretty much closed right around the lows. In the overnight session was interesting. We were up about a dollar and a half, and around 9:30-ish, market started to sell off base, and then just now in the pre-market sold off another 6-7 handles in the ES. So markets are starting to see some selling, which is a good thing. We did talk about the tax selling period, which usually comes around early December, right up into about the 15th of December. So I am still looking for some weakness. Again, we only had a one-day pullback, and we'll see what happens today. But I do suspect some further weakness in the markets, at least until going into next week. Not every day, but you'll probably get that 1 day or 2 day up, and then some movement back to the downside. Now that should create a buying opportunity, and on top of that, seasonal trends really hold well for, believe it or not, the oil sector. Baker Hughes, BHI, I'm looking at. NOV, I am looking at. EOG, I'm also looking at. ConocoPhillips, COP, I'm also looking at. So these are some of the few names that are coming into some seasonal strength, as well as the crude oil sector itself. That commodity is coming into some seasonal strength now. Now, we could see crude in the mid to upper 50s, which that would be an ideal buying area, and that's what I am looking at. We did get a bounce off the big 618 Fibonacci retracements from the low to the high of, I think, 114 in crude oil. So that came into 61.8. It was at 60, I believe it was 62.35, and we had a nice big bounce in the overnight session, and now we're up about 42 cents. So I'd love to see this come in and break that low and really push lower, where we can have a great buying opportunity, not only on the stocks that I mentioned, but in crude oil, or if you are trading the ETF USO. So just keep that in mind. That's going to create a great opportunity for us in that commodity. Okay, so let's just go and take a look at where we are now in the asset classes, in the indices. As you can see, we have the new low, New York Stock Exchange, new 52-week low, starting to spike up here. That is a good sign that we are now starting to pull back. Remember, every time you get these extreme spikes, that tells me that the market is now almost done going down. So we still have some plenty of room here, as you can see, to run to the upside. So I figured I wanted to show that to you. And the bullish percent, SPX, which is based off a point and figure chart, as you can see, it did not cross over the 8 MA. So if we hold weak today, we should get that cross, creating a sell signal in the marketplace. As you can see, this is pretty reliable. There are a few whipsaws, but once we get a good move down, you'll get this push lower like we did here, and then of course here, which I didn't put the arrow, and I wanted just to show you, we should get that cross to the downside. And again, I don't suspect big weakness in the markets, at least not at this time of the year. I'm only looking for maybe a week and a half of some weakness, maybe some chop lower, with some days up. And then, of course, once that tax selling period subsides, then I think we should be pushing higher. Okay, just want to show you. Here's a 10-minute chart. So we had literally nothing on the opening. We grinded higher, and all of a sudden we had one big candle lower. And then this was really the only cue that you could have gotten short the market. Now, again, that's based off of my trading plan. I don't just close my eyes and look to short here. So we wait for that little sideways consolidation pullback and then a break. And this is really all you had here going short. And this is where you would have, if you caught this fast, because it was pretty quick. And that was really the only move down here. And then again, of course, we went sideways into the close. And you could see that by just some clean price action. So if you want to really look at what the market did, take a 10-minute chart, a 5-minute chart, and really dissect what's going on here. And you could see, so here's the opening. We did nothing. We popped up sideways to slightly move lower, and then again we created a little bit of a flag where we got in. And believe it or not, this flag was very shallow, so a lot of traders probably wouldn't even take this. And this is a hard flag to even get short, because If you got back up here, I usually like to take 50% of this candle move, uh, get up to price here, and then fail. That would be an ideal position. But as you can see, it didn't even get there, and then just kind of based over. But I just wanted to show you guys on the 10-minute chart what it looked like. So let's get to the daily charts here. All right, so we're still grossly overbought, as you can see. And I was looking for a 20-day hit, which we basically almost hit. We are going to do this today. So that one target of 204, 205 should come into play here this morning. So that's going to be one of the pullback targets that we're looking at. And then we'll tighten it up a little bit as well. The diamonds didn't do that yet. Did not hit the 20, but it should do that today as well. As you can see, we're still very overextended here in these indices. Here's the transports here. It hit the 20 already and should break today. So the next target would be that 50. And that's good. That's healthy if we can get something like that to really push lower. Again, markets climbing up like this, 29 days and 1 day down. That's not healthy for the markets. When we do get a move lower, we're going to get a more dramatic move to the downside. Okay, because there's going to be one-sided and everybody's going to be running for the exits. Okay, take a look at the IWM again. Very, very sloppy chart. Just one point on the IWM. IWM usually comes into strength here. Seasonal tendencies on the IWM usually comes into play the third week or so of December. Apologize, December. So we still have a little bit of weakness here, but coming into play, you'll start seeing this start to taper off. So I'm watching the IWM too to see if it can really take a good hit lower, and then maybe look to buy into that going into the end of the year as well. Okay, and lastly is the Qs. As you can see, Qs hit that 20. Apple was weak as well. So if we do break that 20, the next target would be this little gap area where we had on November 1st. And of course, that coincides nicely with the 50-day. Okay, please use your stops. Very, very important. We're going to pick up some volatility here. And then let's see what happens going into today and into the end of the week. So I do suspect some volatility to be picking up, and really excited about that. We get some movement because November was just horrendous. We had nothing but literally small gap ups and grind higher, push into the close, and that happened almost every day with no volatility. So volatility is a welcome format. I'd love to see it continue at least going into the end of the year. All right, guys, have a great day, and we'll speak to you tomorrow. Keep an eye on those stocks that I mentioned, and watch crude, because if crude really starts to take a hit, the market will take a hit as well. After a while, it just can't absorb the energy stocks getting battered. It's heavily weighted in the S&P. It will affect the S&P at one point, okay? Have a great day. Take care.